Welcome to Breakout Investors. Today we are speaking with the management of Better Choice Company, ticker BTTR, specifically the company's COO, Robert Sauermann. Joining me on today's call is Breakout Investor Brad Steveson. This call is being recorded on June 30th, 2022, and will be distributed via the Breakout Investor channel on YouTube and via our podcasting network. Look for Breakout Investor content wherever you subscribe to podcasts. We are on Apple, Spotify, Audible, and most other platforms. Supporting materials for today's discussion will be posted on the Breakout Investor Collaboration app, available on the app stores and at app.breakoutinvestors.com. The application and much of the research content is free. After registering or logging in, use the search bar at the top right of any page. Type in the ticker and the results will give you a link to the research post for today's presentation and to other discussion and research relating to today's company. Those of you already on the Breakout Investor platform can share your questions for the company using the Discuss tab in Brad's breakout room. So let's get the call started with me handing it over to Brad. Brad?
All right. Thanks, Josh. And Rob, thanks for joining us. Congratulations on your recent promotion. I saw that.
Thank you.
So for those of you on the call who don't know, Rob was recently promoted to the Chief Operating Officer of BTTR, and I think we could have all seen that coming over the past year or so. So very happy for you. You probably don't remember this, and I didn't tell you this, although I did tell, I think, Walter this, that you and I spoke about a year ago, roughly, with a guy named Randy Freeman. He had set up the call. So this is our second time of having a discussion,
Okay,
but it
perfect.
was
All right. I think
first time on behalf of Breakout Investors, though.
so. You can't say first time caller, long time, or first time question, long time listener. Unfortunately, you said second time. All right.
Right. And you had just brought on your new CEO. I think we talked a little bit about Donald also and what he was doing for you. But anyway, just for those who have joined the call, and we typically record these and share them in the community afterwards too, for the people that can't make it. But anybody who wants to ask a question once we get to Q&A, just raise your hand. We'll bring you off mute and let you ask. I'll have a few to get us started. But before that, we would love for Rob to go ahead and give us an introduction to BTTR. A lot of the folks on this call probably have not looked at this company yet, so this will be their first introduction. So we'd love for you to take off. I'm going to take myself off of camera while you do that, and then I'll come back on when we get to Q&A.
Awesome. Well, and thank you again for having me, Brad. We're, obviously always excited to chat with investors, and I always like to say that it doesn't matter how big or small your position is. We want to make sure that we're giving folks the same access to our management team and really to kind of hear firsthand what we're doing strategically. So that's always exciting. I'm going to go ahead and share my screen now. So just a couple quick legal disclaimers since this is being recorded. Just wanted to let you guys know, that any statements other than statements of historical fact in this document regarding our strategy, future operations, financial position, prospects, etc., that are forward-looking, or include the words could, believe, expect, intend, should, seek, anticipate. Anything that we're looking at from a forward-looking perspective, do note that we are making our best estimates and guesses here. So now that we're kind of through that, wanted to give you guys a little bit of an overview about our business. As Brad mentioned, I'm the Chief Operating Officer. I've been with the company since 2017, actually. My background is on the private equity side. Was on the board of Halo from 2017 to 2019. And then joined up with the Better Choice Investor Group to really lead a pretty transformational pet strategy, really focused on growing organically in key channels, but also combining a couple brands that had been founder-led previously. So I think I always like to start these calls with an overview of who's not on the phone, since I think it's a really important piece. Scott Lerner is our CEO. As Brad mentioned, he came on board, call it in January of 2021. So it's been with the business for over 18 months now. His background as a former captain in the Marine Corps, went to sort of classic CPG marketing with Kimberly-Clark, Conagra Foods, and PepsiCo. Later founded his own beverage brand, and then became a private equity backed CEO, which is how we got connected with Scott. I think he's led a real transformation of the Better Choice business and the Halo brand, really focused on deriving insights from food and beverage, and having those marketing insights apply to the pet category. Coupled with Scott, another key player on our team is Donald Young, who Brad also mentioned. Donald's been with the business like Scott for about 18 months. He's got an incredible track record. 2 successful exits in the space. One, he helped take Nutro to $800 million of sales before selling that to Mars, and then more recently, really helped drive the growth of the Merrick brand from, call it, 50 million up to 500 million before selling that to Nestle Purina. So, this is kind of his third rodeo. He jokes third and final rodeo, but very excited about all the expertise he brings to the pet specialty channel as we think about growing our brand. I'd also note, just before we get too in the weeds here, that we're a unique microcap company in that about 25% of our business is insider owned. Recently, insiders just deployed about $1.5 million worth of capital to acquire stock in the Oaken market. So we're really putting our money where our mouth is, and we're excited to really drive growth of this business from this point forward. So a couple key highlights I would just note. Our target here is to get to call it $100 million plus of gross sales by 2023. Right now, we finished last year, call it roughly $55 million of sales. If you look at our Q1 results, we're growing north of 40%, really underpinned by success in the pet specialty channel, which is Donald's wheelhouse, as well as a rapidly growing international business where we have a significant amount of contracted volumes. I'd also add that we have a strong presence online, and that's really underpinned by a significant online recurring revenue base. I like to think of this as a little bit of a floor-like revenue, where about half of our customers are on subscribe and save. There's a credit card down, and they're purchasing pet food, call it monthly, for delivery at their door. And then lastly, I would say we are asset light. We have kind of 5 key core manufacturing partners that we work with on a daily basis, and they really are our partners as we look to grow. For a business of our size, we think it actually allows us to be more innovative and launch new product lines quicker. I think we touched on this, but our omni-channel strategy is very important. It's all about accessing millennial pet parents, wherever, whenever, and however they choose. Again, we think about our channels complementing each other. How can we? I'll give you guys an example. We recently, on our D2C platform, wanted to actually partner with brick and mortar retailers and use that as a mechanism to drive folks in store who might have found out about us online through a couple ways, and we were doing that with store locators and specific products. So we think there's actually a real mechanism to allow our channels to work together and really help consumers purchase our products wherever and whenever they want to shop. I think talking about consumer base first and consumers is super important. When you think about the pet category, 80% of people that make purchasing decisions for pet food are women. It's really important to be a brand that caters to that female consumer. And I'd also add that if you look at recent pet ownership trends, so if you think COVID, I'm sure many of you know someone who got a dog or a cat during COVID. 11 million new pets were added to the 120 million pets that are already out there in the United States. And the vast majority of new pet owners during this period were millennials and Gen Z. So it's very important to be speaking to the younger generation of pet parents. We've also noticed that they tend to be a little less price sensitive, even if they have lower incomes than maybe an older generation, and they really tend to care about product quality and product nutrition. So Halo Elevate is the new product that we're launching right now in Petco, Pet Supplies Plus, and other independent retailers. And this is really, I would say, Donald's baby. If you look, these numbers are from Q1, but if you look at sort of the success we've been able to have to date, we've got placement in over 1,000 Petcos. And if you're looking to find our products, I'd recommend going on our store locator on our website, and you can actually search by product type. Click Elevate Dog, and you'll be able to see where some of these store sets are. But we went in with 4 to 8 feet of space initially on the seasonal wall. In July, we're actually switching full time to the permanent dog aisle with Petco, which we're really excited about. And then with Pet Supplies Plus, we launched in 600 plus stores in April of this year. Very excited about sort of the initial feedback from that launch. That's a permanent placement. They actually worked with us on end caps as well, which was really exciting. And we're a preferred brand there. We're also a best in choice brand for Petco as well. So we get preferential signage, preferential treatment from store associates, and which is really where we expect to drive conversion. And then lastly, independent pet via the Phillips distribution opportunity is something that's very important for us. When we think about independent pet, it's less about adding quantity of stores and more about adding quality of stores. As you can see in this photo here, which is from a Nashville pet location, that's an incredible amount of footprint and signage for our brand. And one Nashville pet store might be tens of smaller independent stores in terms of the volume you can do. So really finding those partners in independent pet and driving growth there gets us excited. And I think just to talk quickly about what makes Halo Elevate different and unique, and I'll be quick here. And what's actually kind of cool is you can scan this QR code on the back of our bag and click through some prompts and actually do a product comparison with any other bag that's in a preferred brand in the store. So I think that, I think that ability for us to connect with that brand comparison has really helped resonate with store associates, and that's a big part of Donald's sell-in strategy. At a high level, we have a very high level of protein sourced from animal protein, about 90%. That's close to an industry-leading average. We also have high levels of omega-6 and omega-3 to support a healthy skin and coat. Glucosamine chondroitin, supplement levels of that to really promote hip and joint health. And then our product's all freeze-dried, raw-coated, so it's super palatable and really a great option for pet parents. When we think about how we can deliver from a nutritional perspective, we will beat any brand in 3 of the top 5 categories. So we actually do a $100 challenge with store associates where we say you can walk away with a $100 bill if you can find any product at any price point on your store shelf that can beat ours. And I think Donald has yet to give away his $100. So that's always a good sign for us. And then lastly, when you think about our brand, what we're really focused on is having that same look and feel that our packaging conveys translate to what we do on the marketing side. We have a new look and feel on our Instagram. Halo Pets is live. We actually just launched our new 60-second spot, which you can find on our homepage, that really is resonating with millennial pet parents. Sort of the theme here is all about pets being the world's best kids, and that's an insight that we found is really resonating. We're intentionally marketing in spaces where these new millennial pet parents are, often online. So for an example of that is TikTok, where we've got over 2 million views in the first 3 weeks of this campaign. And we really haven't even put a ton of marketing dollars behind that support. So great to see, and we're excited for that to translate into sales. And then lastly, alongside Halo Elevate, we've also got Halo Holistic, which is a phenomenal product in its own right. It's all focused on sustainable sourcing and no meat meals. So it's a really high quality protein for folks that care a lot about sustainability and more limited ingredients. That packaging is being rebranded and relaunched in Q3, Q4 of this year. And that's also something that we do sell quite a bit of internationally. And then historically, we also took the True Dog brand and transitioned that over to Halo freeze-dried products. So we have one master halo brand that all of our marketing dollars are supporting, as opposed to a couple different brands that require their own marketing dollars. And then lastly, on the international channel, we're really growing rapidly here. There's an incredible amount of demand in Asia. We did $7 million of sales in Q1, which was half of what we did for the entirety of last year. We're expecting continued growth in this channel and actually margin improvement as well, which I think is a really important segue to transition to a little bit is the fact that we're both growing our top line, but also increasing our gross margin over time. We've been able to move and increase our gross margin primarily through a shifting of co-manufacturing partners and optimizing our run times. So we've moved from 40 to 50,000 pound runs to 100,000 pound runs, which give us a cost benefit. We've optimized our mix and some of our running our better gross margin formulas more frequently. And then a big part of this, which I'll quickly touch on, is moving our international production from one manufacturer to a manufacturer up in Minnesota, where we're able to pick up 10 plus points on gross margin. In addition, we took a price increase in April, both in our domestic and our international business, that has allowed us to both sort of weather any raw material inflation, but also increase margin sequentially quarter over quarter. We talked about an earnings call for Q1. That's a trend that we expect to continue. I'd also add that we feel like we're in a really healthy position from a balance sheet perspective. At the end of Q1 2022, we had about $23.4 million of cash on our balance sheet. As Charlotte, our CFO, pointed out, we do see quite a bit of swings in working capital quarter over quarter, and particularly because we're in the middle of a launch. But we've been actually able to use this the strong cash position to our benefit and secure incremental production, help optimize margin, and really drive growth going forwards. I'll wrap up here pretty quickly in terms of the prepared remarks. Want to make sure we really have time for questions and can dive into our business. But at the end of the day, we're incredibly excited about what we've got going on as a business. We're growing north of 40% on a quarter over quarter basis right now. We're increasing our gross margin sequentially. We're looking at targeting profitability for our business, kind of the inflection point being mid next year. And we've got, we think, the firepower to do so. I think for us, pet's an exciting category. It's always performed in challenging economic environments. Pet food tends to be very recession proof. That was a trend that we saw in 2008. And we're just continuing to see folks really invest in their companion animals and treat their pets like they would their children. So I'll stop there on the presentation, and if you guys want to, feel free to hop in, ask questions. We can go any different direction. I think my cat Chovy has decided to calm down now and won't be interrupting our screen, but so that's a win.
Yes, that's a win. Thanks, Rob.
Awesome.
So I was looking at something today, and I guess I wanted to confirm that with you, but I think I saw a stat that said about 35 million households have children, but somewhere around 85 million households have pets. Does that sound about right to you?
I thought that the households that have kids was higher. Maybe that was that households with children that are actively residing in the home, or was that people that have? Regardless, there are more households that own pets than households that own children. I will give you that for sure. And then the average household pet ownership, I think, is around, if you own a pet, you own typically 1.7 pets.
Okay. And then the other stat I saw, and maybe this is right or wrong, but about 80% care for their pets like their children, as you have said, and also believe the quality of their food should match the quality of their own food.
I would 100% agree with that. I'd actually take that a step further and say that people typically tend to think more about their animals' health than they do their own. There's a lot of folks that go out there and eat fast food and then buy, premium kibble. So it's kind of a funny dichotomy. But I would definitely agree with you that there's a real focus on feeding companion animals, a high quality of food.
Okay. So one thing, and this is maybe just to educate me a little bit on the packaged good process, but you have manufacturing partners. So the way I understand the process works is you secure the ingredients, ship them to the partners, and then they handle the manufacturing and getting them to the distributors. Is that?
I would
you
actually clarify that. We don't take ownership of actual inventory or any raw materials until it's a bagged finished product. So the only thing that we do own bags, in terms of that. Bags are our work in progress inventory if you were to look on our balance sheet. But we're not actually going out and ever owning or responsible for raw materials. We occasionally might partner with co-manufacturers on payment terms if we feel like there's an opportunity for us to capture margin that way. But at the end of the day, and this is actually an important point, the reason why we were able to pick up margin when we switched co-manufacturers was how those co-manufacturers purchased raw materials. So our new co-manufacturer on the kibble side actually had a direct relationship with a lot of those protein processors, because they themselves are also beef producers, and they were able to really benefit from that relationship.
Okay. Halo Elevate, you obviously had a big surge of 2.3 million or so because you were stocking the shelves for the first time in Petco and Pet Supplies Plus and so forth. Are the reorders? I'm assuming you had a reorder forecast for Q2, and we've just completed Q2 today. Can you say if that forecast, if we're meeting or beating that forecast?
So I don't want to give guidance, but I can give some anecdotal commentary, which is that our retail partners are really excited about our launch so far. We've had quite a bit of positive feedback from our retailers, and to the point where Petco's really excited to move us from the seasonal wall to our permanent placement in July. The seasonal wall placement is really about educating store associates, getting on shelf, getting some of those initial interests, right? Whereas you start to see the real benefit from being in the permanent aisle, in the dog food aisle in July. But I think both Petco and Pet Supplies Plus are really happy with where we're sitting today, and looking forward to growing together. So I think the big thing, which I didn't mention earlier, was we actually guaranteed to our partners for this year 100% fill rate, which, if any of y'all have been in a pet food store, have probably seen their empty shelves, particularly on the dry kibble side. So that's been a real benefit for us. We've been able to guarantee that from a partnership perspective, and they've been able to work with us to help convert customers that might be feeding a different brand.
Okay. And I'll say before I ask my next question, if anybody else has a question, raise your hand. Feel free to jump in. Your 100 million revenue target. So you've got 4 channels: your direct to consumer, your international, your I'll just call them pet stores, and then your e-commerce. Can you sort of put that 100 million in those buckets for me a little bit, where those might be?
Sure, happy to do it. I've historically kind of framed this up as almost like a third, with call it pet specialty, so pet stores representing maybe 30 million roughly of that 100 million of gross sales. E-commerce representing maybe a little over 30 million, and I'm going to include, when I say e-commerce, I'm actually going to lump in direct consumer into that. So that would be Chewy, Amazon, and our own website. With Chewy and Amazon, we think of those as call it $10 to $15 million businesses and growing today. And then our direct consumer website is a similar size as well. And then lastly, international. International is an interesting one where, historically we said that maybe it would be $20 to $25 million of that $100 million bucket, but we are outpacing growth that was contracted originally by a pretty substantial margin. So international is just becoming a larger share of wallet as part of our business. And with the shift to our new co-manufacturing partner, we actually anticipate it will be a gross margin driver in the positive direction for the second half of this year and into 2023. So that's a real benefit for us.
Okay. And speaking of gross margins, you were over the course of last year, I saw each quarter gross margins kept coming down. They kind of hit a low, I think, quarter 4, started to come back up in quarter 1, and I think you're projecting that to continue. And you mentioned that in your comments today. Can you talk about what, just so I don't quite understand what drove them down in the first place?
Sure. So what I would say is we saw, I think everyone is top of mind on the inflation story, right? That's almost number one in terms of what investors care about in terms of the CPG landscape today. The producer price index for raw materials on the food side increased dramatically in Q3 and Q4 of last year. So at that time, we took stock of the situation, wanted to evaluate what our pricing looked like for this year, 2022, knowing that there was going to be a significant amount of inflation on the consumer side as that gets passed through. We made the strategic decision in Q2 of this year to implement a call it 8-10% price increase, which is consistent with actually the rest of the industry. If you look at where pet food inflation has trended in the month of May, it was about 9%. So that's a margin driver for us because production costs from Q1 to Q2 haven't changed as dramatically as they might have changed from Q3 to Q4 last year. And then I think also what's really important is that the majority of our of the margin hit that we saw in Q3 and Q4 of last year was on our kibble portfolio, which is roughly 60% of our domestic business, but almost 100% of our international business. And because of regulatory and how certifications work, we weren't able to move our international business to a new co-manufacturer at a better margin until 2 weeks ago. So we've officially implemented that, and we're excited for us to capture that margin. So you saw an increase in Q1 of our domestic margin from 28 to 33%, with our international margin holding close at 20%. As we fast forward into Q1, that our increase from 25 in Q4 to 28 consolidated was driven by the switch in domestic co-manufacturers. Any margin increases that we're going to realize in Q2 are going to be more driven by price increases. And then margins increases that are driven in Q3 and Q4 are going to be driven by a combination of price increases as well as shifting that international production fully to our new co-manufacturer.
Yeah. So when you fast forward to 100 million in revenue, do you have an idea of what gross margins might look like at that point?
I think when what we've said historically has been somewhere around that, call it 35 to 40% range long term, with our target being that 40% at a long term level. What I'd also add too is that our focus is really on driving conversion of customers to everyday food. So kibble is a great example of that. If you think about dog owners, 95% of dog owners are going to buy kibble at some point. They may not feed kibble primarily. They might feed it mixed in with wet. It might be, something that they only use for trips, but pretty much everyone is buying kibble. And what's, I think, really important about that is kibble's a really sticky product. So if someone buys 3 bags of our dog food in 3 months, there's, call it a 70 to 80% chance that they're going to be a consumer of our product for the life of the dog. So there's a really high value LTV customer that can be acquired via food. That typically means that on a general basis, food margins are a little bit lower than treat and supplement margins. So the trick is to get someone brand loyal off of a food product, they stick with you, and then also sell them higher margin treats, higher margin supplements, things that can drive your consolidated gross margin over time. So when we think about innovation going forward from this point, all the innovation that we do is intended to be gross margin accretive to our current position. So that's why I would say as we expand, Better Choice in the Halo brand over time, there's a lot of gross margin upside in addition to just the strategic things that we're doing on the kibble side.
Okay, great. So Charlotte talked a little bit about operating leverage kicking in, and can you just sort of what I'm trying to figure out is how much of your incremental revenue will drop to the bottom line as we look forward. Do you?
Yeah,
something you can share?
I would say that our internal sort of we have an internal marketing stage gate process for any new innovation, and the hurdle rates that we typically evaluate new products on are contribution margin, which is sort of net of marketing spend, net of trade dollars, and whatnot. And for a project to make it through stage gate, generally needs to be between a 20 and 25% contribution margin. So that would be generally how I would describe the effect of a marginal dollar hitting our bottom line.
Okay, great. Let me pause again and see if anybody else wants to jump in with questions. I have more if not.
I love it. If you ask a question, I'll give you a free bag of dog food. So that's always I'm all about converting investors and and consumers, right? Those are the most important.
My dog's smaller than your cat, so it'd take a long time to go through a bag. But
it's okay. Big or small. So I saw a tail in the background. So.
Oh yeah, probably.
What's
I
your
know
dog?
you like. Bigger dogs are better in your view, I'm sure, because right that means more product.
Bigger dogs are definitely better. It's it's a lot of fun. I think what's interesting is you talk about the difference between the dog and cat market, right? I think is actually one that's worth touching on. If you think about the U.S. markets, they're about 70%, 80% of the revenue is dog, and 20 to 30% of the market in the U.S. is cat. But there's actually a really interesting opportunity for us to be successful in cat in addition to dog, because so much of our international business is cat. Cat food in Asia is really where a lot of the growth is coming from, and we're being really successful. And so it actually gives us these production runs and innovation that we're able to do for both the international and the domestic markets that other brands that are domestic only maybe don't have the scale to do the innovation that we're talking about. So I think it's a cool advantage for us. But we love small dogs too. Come on, we're a pet food company. We can't discriminate.
Of course not. Okay, so let me talk about capital strategy a little bit. I noticed I was a little confused because I noticed there was a buyback program, and then there was an equity raise after that, and then another. Kind of felt like things were a little out of order on that, maybe. Where at this you have a buyback program in place now, I think, right? A couple million or so.
We do have authorized. We have authorized a buyback from the board level. That's correct.
Okay.
What I would say. So why don't we just kind of rewind and talk about everything that from a capital perspective that's happened since we uplisted. I think that's really important. We raised $40 million in concurrent with the uplist, the NYSE. We used to have kind of a funky convoluted cap structure with a bunch of convertible debt. a bunch of some preferred equity that was outstanding. All of that converted at the uplist price into common equity. So it really cleaned up our cap structure, and it gave us, call it $36 million in net proceeds on the balance sheet. Last year we bought back, I think the dollar number was about 1.7 million of stock from the buyback program. As we fast forwarded a little bit, we structured a block trade, and I think this is pretty public knowledge at this point. You can see the 1.5 million shares that traded, and that's where management really got involved and purchased a significant amount of incremental ownership from a larger party that exited. That occurred, call it 6 or 8 weeks ago, roughly. We did PR that. When we think about sort of incremental volume on, the 3 million that's authorized from our buyback, we're really cautious and prudent about how we manage our cash. Our goal is to, if there are significant adverse market conditions and things trade really strangely, our board wants to make sure that we have the ability to act quickly and respond to those market conditions. But at the same time, our strong cash position right now is a huge relative strength for Better Choice, and we don't want to sacrifice our ability to execute. I know that's not an easy, or straightforward answer, but I think what I'm trying to say is we're very cautious about our cash balance. We recognize it's a strength, and we're not trying to, be too aggressive in that regard.
Okay. And are all the warrants going after the IPO? Are there any warrants still hanging out there?
There are warrants that are out there. Almost 70% of them are owned by insiders that were part of a Series F raise that was done a while back. They're out of the money and they're cash only exercise. So in the event that those warrants are exercised, there would be a significant amount of cash that would come into the business. So I think it's not a traditional overhang that you might see in other microcap stocks. I'd also note that the uplist process that we did, there was no warrant associated with that. That was all common equity.
So that was the ones I think that were pre-split. Was it 75 cents maybe pre-split?
Pre-split. They're post-split at 45 or 450 exactly. 450.
Okay. I that's what I wasn't sure. I didn't see those referenced in the 10Q, and I didn't know if you took those out when you did the IPO.
So. No, they're still there. Those are from October of I think 2021, or excuse me, 2020, not 2021.
Okay, great. Let's see, China. So you got lockdowns going on off and on, but you also have some tremendous growth going on there. Would it be a fair assumption that that there's a lot of opportunity there that you've barely scratched the surface? Is that fair?
I would say so. I think what's really amazing, if you look at what we've been able to do in some of the latest promotional events, is really become a top 10 premium cat food brand in China. And for a business of our size, that's, I think, really a huge accomplishment for our entire team. We're growing very rapidly in that space. Yes, there were lockdowns, but I think our partners in China did an incredible job making sure that we always stayed in stock, even if it got a little tight, but we always stayed in stock during that period. And just like when the US was in lockdown, people were still ordering pet food, right? And that's, I would say that the experience of China consumer behavior in lockdown recently was very similar to how the US behaved in the early months of the pandemic in 2020. So from our perspective, pet food was very insulated from that. And it was an opportunity for us to continue to acquire customers.
And did I understand you right that you think international sales gross margins will be better than domestic eventually? Is that, or were you just
I
saying
think
they would
they'll
be equivalent?
I think they'll be on par. I think
On
my
par.
comment
Okay.
for this year is more, you're going to see launch expenses, all that kind of stuff flow through our P&L as you look at pet specialty. And so the pet specialty margin itself improves over time, right? Because of how that all gets factored into the P&L, whereas international is somewhat steady eddy. So international will be margin accretive to our average business for the second half of this year. But I think long term, we try and structure all of our business units to approach 40% over time. That's our goal.
I think over the past, like the first quarter compared to prior first quarter, it was almost triple, wasn't it?
Sales volume wise?
Yeah.
Yes, that's right. We almost 3x'd our, I think it was like 3.2 times. And we're excited to kind of share an update when we're able to do so on that business.
Okay, great. Let's see. Fresh Pet, will that be your main competitor, or is there anyone else you'd point to?
I would say that from a consumer perspective, we more align with the champion foods of the world, which is Akana and Origin. Merrick is a close competitor of ours. Purina One, Wellness to an extent, Honest Kitchen, those type of brands. From a public perspective, there just aren't many pet food brands that are public. So Fresh Pet certainly is a great comp for us. I would say that. So here's an interesting stat. If you think about Fresh Pet, 50% of people that feed Fresh Pet also feed kibble. So they're actually feeding Fresh Pet as a topper on top of their kibble products. So I think fresh is an opportunity for us to continue to look at from an expansion perspective, whether that's a brand partnership, a line extension, whatnot. But fresh and kibble are not necessarily competitors. I actually think they're more complementary.
Okay.
Yeah.
As you transition to holistic from TrueDog, do you expect inventory reserves to be significantly impacted? Will there be a little bit of a surge there, or is it fairly covered already?
I think for the most part it's covered. I'm not as close to that process internally, but what I will tell you is that the way that our runouts work is that if you're an existing TrueDog subscriber, we will transition you over the course of 2022. So we've already communicated the transition to everyone that subscribes to our email list for TrueDog, as well as folks that are already buying TrueDog today. And so you might see, let's say you order 4 different products from us every month, you might see a box that has a couple Halo products and a couple TrueDog products in it, because we're using our subscriber base to round our inventory. It's not a hard switch, because it's really the exact same product that we're putting in just a different look and feel bag. So that really enables us to maximize the inventory on hand that we have for TrueDog and really avoid situations where we have to dump product.
Great. Okay, well, I think I've about exhausted my list. I was going to ask you to talk a little bit about Donald Young and his past successes, but I think you already did that. So that was kind of my last question. But I think he's kind of a rock star in that business, isn't he?
I mean, he is. Donald, look, you can look at the filings and see that he personally invested $1 million in our business, along with that insider purchase. He's incredibly bullish about sort of our strategy. His team that he's been able to cultivate, we've brought over in the last 3 months 6 or 7 new sales associates, all of whom he's worked with more than 5 years. So we've been able to essentially cultivate a team that already hits the ground running from day one. And it's I gotta tell you, it's really exciting and a lot of fun to ride alongside these guys when they walk in and pitch a store and to see a lot of their day-to-day successes. So as any investor would probably be given a lot of confidence when you talk to Donald, I personally, get a lot of confidence when I talk to him too. So, he's a big part of our story in pet specialty.
Great, thank you. All right, well, any closing comments? I haven't seen it. Nobody else has raised their hand, so I guess it was just me and you with an audience. So, any closing comments?
No, I think that's about it, Brad. All I would say is thanks for everyone for joining today. You should always feel free to reach out and ask questions directly. If you have a dog or a cat, I definitely recommend you try our food. I don't think you'll be disappointed. And we're really excited to drive a launch this year and push forward. So thanks again for inviting us today to chat, and my virtual Microsoft Teams door is always open.
I appreciate that. I'm sure I'll have other questions as I dig into this more again, and I'll reach back out to you. And I'm going to try the pet food, and I'll let you know what my dog says about it.
Awesome. Yeah. If it's hopefully it's a couple barks, and we're good to go.
All right. Well, have a good day. Thank you.
Thanks, Brad.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers and not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.